What is going on, you guys, and welcome back to another video. If you are new to the channel here, my name is Brandon, joined with my father, Mark. As always, we do have our Investing Academy as that first link down below. But today's video is going to be talking about the whole situation we have going over in Ukraine, Russia. Actually, more importantly, I think it's how does this type of event impact us as investors? And Dad, you've lived through this probably in multiple occasions throughout your life. Yeah. And that's kind of why I want to hear your thoughts and your perspective on maybe looking back at a little bit of history, maybe looking at the current events of what's happening and how we should position ourselves as investors. Before we get started, how are things going over there?
Over in Russia or here in Powell River?
I was thinking Powell River because that's, yeah.
Things are good here in Powell River, thanks. Yeah, really beautiful sunny day. Just got back from a bit of a walk and ready to chat about what's going on in the world right now.
Yeah, well, let's keep this one short and sweet, kind of cut to the point, but maybe what should we start off with here, Dad? I just want to hear your thoughts.
Well, I think as we were sort of preparing for the video, I kind of think there may be two sections. First of all, kind of a recap of what's happening right now. We don't have to go into the fact that there's a war. I mean, everybody knows that. I think from an investment perspective is what economic impact I think is the biggest thing. From a global perspective, what parts of the world that will hit on. So maybe sort of a recap of that or just sort of an update on that. And then what I think I could speak to is, like you say, I've been through this before and different geopolitical events, and I'm going to call this a geopolitical event of quite magnitude. So look at similar types of things that have happened over the last number of years and how the markets have reacted. And I think that would be valuable, especially for people who haven't been through events like this before. So maybe some younger investors or more mature investors who haven't invested for that long. So I think that's probably where I can add some value today, Brandon.
I love that. Well, hey, why don't we start with that? What should the viewers, the audience know about Russia? I mean, I don't invest in Russia directly. I don't think many of us do. Maybe some do. And maybe through some international ETFs, you got that exposure. But maybe start with some notable things about Russia that I think may kind of set the stage.
To your point, I've never invested directly in Russia either. I've never invested in Ukraine directly. So it's not a market that I follow, but they do have some impact. Key point, the impact that they have directly is certainly more European focused, or it impacts Europe far more than it will here just because of their trading relationships. Just like, we trade more with the US, so an effect and an impact on either of those countries would affect the neighbors more. It's no different over there. Just put together a few facts here that people might find interesting and are relevant to what we're going through right now. You've heard a lot of talk about the natural gas impact and energy, and one of the biggest repercussions we're seeing globally, and we've seen this since the invasion kind of started formally or even leading up to it, is the energy spike that we've seen, the price in oil, but also natural gas. And in the from a global perspective, Russia has about 17% supply of the natural gas. But really, really importantly, in Europe or in the UK, it's about 40% or so of the natural gas supplies that go there. So when we think of this price shock and we think of the impact on the equity markets, because that's what most of us are sort of focused on here, that's where we're going to see the biggest effect, I think. Many people who even are based here in Canada or in North America will have European ETFs perhaps, or mutual funds that have exposure to Europe. So that's probably where the biggest effect will come into play there, Brandon. Mostly, I mean, we look at Germany, we look at we through our portfolios, and personally I invest in Unilever, for example, a European company, invest in companies like Nestle and a smattering of others. So we will have a direct impact that way. But as far as they're going to impact us here in Canada, the biggest thing is going to be oil supply is a global thing, and Russia supplies around just over 10%, I think, of the global oil supply. So we've seen that impact, and it's obviously Canada is a very, very energy-based, oil-based function. And when we look at our economy, when we look at the returns since this whole thing has come, we look at the diversion between Canada and the US, where our energy companies have done quite well through this, held up the TSX. So that is something to consider if you have a lot of exposure or no exposure to those sectors. The last thing I would say also from a trade perspective is about half of global fertilizer production comes from the Ukraine, from Russia. And so Again, what impact that will have on us directly here, not really sure. These are just some of the key areas that if there's going to be an impact on us, Russia, those would play out.
No question. I was just gonna say from kind of keeping up to date, there's no question that top of mind it is the energy. It's the energy space that's really the talking points. That's what you hear about, and it makes sense. They are a big supplier again, mainly to Europe. We came across some stuff, and I didn't know this prior, but they're actually pretty big in the chip space, and palladium being actually the major component of that. But Russia, for those that don't know, I believe what's the exact numbers on that, Dad?
I believe about 20% of global palladium comes out of Russia, and I think Russia and Kazakhstan have that supply chain there, and a big part of actually it's just Russia I think that has the palladium there, and of course there's already a global shortage.
Just more fuel to the fire. Yeah.
So and that can have a direct impact. When you look at obviously we've been grappling here and around the world with inflation. And when I guess the most direct correlation to what we're doing here is when you look at the combination of with this energy crisis that's going to drive up energy prices, which is inflationary, and you're also going to have with the prices with inflation going up, that decreases purchasing power. So you have that sort of dreaded combination of the rising inflation, you have the weaker demand, and there's no economic scenario where that's a positive thing, right?
So no question. I think that, as you mentioned, there's kind of two components to this. On an economical level, like what's actually happening out there, there are impacts. There are absolutely going to be impacts that we may feel here, we will feel here, but that we do kind of put a separation between what's happening in the stock market, the share price. We try to correlate that up to like, how is this actually affecting us and impacting us?
I would say from an impact perspective, we're going to see volatility. I mean, we have seen it spike, and we're going to see it continue to be quite. I mean, maybe watch the VIX as an indicator of the volatility, and it will at some point, of course, come back down to a more normal range. But that's one thing to watch. And again, I'm just going to reiterate for a second. I do expect directly European companies and the European economy to be hit harder than North America, but it's a one big global marketplace right now, so of course everybody's affected. Any other sort of things that you were thinking of, Brandon, that would play into that narrative? Or
well, no, I'm just trying to kind of pinpoint these things from like clearly the stock market has been shaken up by this. And I mean, it's actually been shaken up a little bit even before this actual invasion happened. The markets have just been shaky in general based on the, like, it's kind of, they're kind of overlapping in a sense. This may just be a catalyst that's kicking things up a notch. But, again, I'm trying to piece this together because I'm thinking back to previous wars, previous, situations like this, geopolitical events. There's probably very similar stories we can talk about, whether it is, going into Afghanistan or whatever the case is, there's the same talks about oil, this and that. And, for the way I look at it and the way I think a lot of viewers can look at it is there's ways we can kind of we can try to play certain events that we feel are going to happen, or we can just look at more broadly, like what happens during these times. And I know we have a couple of slides that have, at least over a couple of cases in the past, events over the past have, played out. And I'm wondering if you're kind of expecting this to be a similar case. Again, you can always pinpoint in each specific event, this is an area that's impacted, this is not. But in general, like what should we expect out of the stock market, and how more or less should we approach it as investors? Awesome
question, and well framed, Brandon, because whenever an event like this occurs, you kind of have to go back and learn from history. It doesn't repeat itself, but it rhymes, as they say. And so learning from past events, and like you said at the outset, I'm fortunate, I guess, in a way that I've been around long enough that I've been through some of these. So, I mean, there's the visceral reaction where you feel, worried in some cases. You had mentioned that the markets were already declining. Year to date, the markets are down pretty significantly. In fact, as of one day, I think it was probably Wednesday of this past week, I mean, all of the major indices, the North American indices, had fallen into correction territory. With the sharp recovery the other day, they've come out of there. Most of them out of the NASDAQ, I think. But they were on that slide. Now, this has exacerbated that. And so the question, the unknown is, well, to what extent is that going to make it worse, or is this just going to sort of be the final drill there, and then things will recover? I did put together, I think, 3 charts that you can throw up on the screen, Brandon, about events that I've lived through and, as an investor. And let's start off, with sort of one of the big ones, which is after the 9/11 attacks, so, back in 2001. And if we look at this chart, as all of these political events have, you do see a reaction out of the gate. Pretty much all of these types of things. And we'll look at a few more in just a moment, but you'll see, at the time of the attacks, a noticeable sharp decline. And there's the red line indicates the Canadian, the TSX on this chart, and the blue line is the S&P 500. So I just wanted to sort of see the difference between the US and the Canadian markets, but very similar, if you will. And on the bottom part of the chart, the bottom half there, those lines are positive and negative days. So you'll see the string of negative days and the significant negative days immediately following these events. And those are the lines for the S&P 500 there. Notably, as has been the pattern, is when you see the bottom out, these events typically shake up the markets pretty quickly. Then once the dust settles, you see things recovering, and we'll see this chart goes through till the end of 2001, and we'll see the markets had basically recovered from that event at that point. Little more recently than that, in 2014, some of you may remember a similar circumstance to what's happening right now, where Russia invaded Crimea. So maybe kind of like a carbon copy of what's happening now. That was early in 2014, in February and March. Again, if you look at it from a market reaction perspective, almost the same thing. You see a very, very short blip right at the beginning. And so the left-hand part of this chart here shows in February, March, and the markets basically shook that off in pretty short order. Canada, US markets acting a little bit differently, but pretty much in tandem. And then if you look more recently, in September of 2019, this was a terrorist attack on the Saudi Aramco oil fields. And we see that happened in, I believe, late September in 2019. Again, you see the immediate reaction, and then things just sort of shake it off, and away we go from there. We don't know if this will be a repeat of history, but there's probably as good a chance of that as anything else.
Before we continue, I do just want to say thank you to INVRS for sponsoring today's video. INVRS is a tool that's based right here in Canada. I use it as part of my research regimen and practice, which gives you all sorts of fantastic features when looking at the financials of different companies. The companies can be both US, Canadian, North American equities, you name it. They have a wide list. You can network within their community of investors, see different posts regarding around different stocks. You can even share and publish your posts if you like. Personally, for me, what I really like about INVRS is this interactive part where you can basically compile up all different types of data points that you want. It makes it so easy when you're researching and compiling your notes for a specific stock. What's best about INVRS is that it is completely free to use and will be going forward. Down below this video, I will include a referral link where you can go and sign up, let them know that I sent you. But thank you to INVRS for sponsoring today's video. Back to the video.
I do, in one sense, Brandon, I understand why the markets react. At the same time, having been through this a number of times, if you feel comfortable, and if we or if the big money managers of the world feel comfortable that we will work our way through this, I don't really understand the big sell-off in markets. It's very short-term looking. If you're a longer-term investor, are we at the bottom now? I don't know, but I'm seeing this as a buying opportunity. I've been adding recently to my portfolio, and I expect to be making some more purchases early this coming week.
Sorry to cut you off. Yeah, it's funny. Yeah. I'm in the exact same boat there, Dad. Like, it's since the news broke and since the markets have been selling off, there hasn't been a second where I've been worried or concerned about what's going to happen. I haven't. And again, maybe this is just the way I've been bred and the way mind thinks, and that's how I think a long-term investor should think. There's no reason to panic from a stock market perspective or from our portfolio perspective. It's more or less an opportunity at the end of the day. Again, whether it plays out as it has in the past, it's just, I'm kind of just approaching it as is. And it's funny, I was talking to one of my friends out at the dog beach the other day. He literally asked me, should we be selling out of our stocks now? Like, should we be selling out of our stocks and waiting to, things get worse? And again, that's a compilation of everything that we have going on in our market. And that, it's so common that you hear that question, should I be selling out and waiting for the worst to kind of pass? That would never be an option that crosses my mind. That's just no question. That doesn't cross my mind. And especially when you look at some of the charts that you did, again, not to say that we should expect that and that it's guaranteed, of course not, but there's usually a little bit of a shakeup, and then the markets do kind of correct, and it ends up being an opportunity. And again, if we fast forward 10, 15, 20 years down the road, I like the fact that you started with, the actual economic impacts. Yes, they are there, but in general, the way I look at it is that we're getting, cheaper prices on some stocks, pretty much across the globe.
Yeah, and you mentioned, and I reiterated, that the markets had been on a decline. If you look back over the last number of months, so in 2021, of the videos that we did together, a sort of recurring method or recurring theme was the markets are pretty pricey right now. We looked at some S&P numbers and the Schiller index, etc., to see, or some PE number rather, to see where the markets were, and we were saying they look a little bit heated here, so be cautious and maybe build up some cash, etc. So that, I think, was occurring regardless of this.
Yeah.
And so this has just compounded it. You mentioned, Brandon, that you're not feeling panicked, and I guess, to me, as an investor, I don't think you should be in a position where you should be panicking. If you're panicking because of these type of events, you're not set up going in. If you're prepared properly, if you understand what you're doing, I can beat a dead horse here, but you shouldn't be panicking. At best, you look at, okay, I'm going to look for opportunities here. Even if you just want to ride it out, it still should be okay. But if you're positioned properly going in, and good old fashioned, properly diversified, etc., and especially if you have built up a little bit of a cash reserve or built some fixed income you can roll into equities, this truly may be an opportunity. Saying that, are we at the bottom now? Who knows? It doesn't really matter. If you own company XYZ and it's down 20% and you feel it's a good long-term hold and your due diligence says buy it, and you buy it now and it goes down another 10%, I don't care, like you say, 5, 10, 15 years from today, you're never going to pick that exact best day. I did throw up, I prepared one other sheet here. It's a little bit longer and more detailed, but maybe if you can put up on the screen, and it sort of goes through a bunch of other events like this, going right back to 1941 with the Pearl Harbor attack, and it shows the drawdown of the S&P 500, and you can see it's typically fairly swift. But then on the right side, it shows days to recovery, and there's some very, very quick recoveries, and other ones take a little bit longer. But even Pearl Harbor was less than a year in days, and I think that you're going to see similar type of things here.
Yeah. So again, I think just maybe to summarize, if we look at this war event in and of itself, these are some of the things we can expect. But then you compare that up to just how our markets have been, interest rates rising. You still have that general concern. It's not that, if this event had occurred during I don't want to say a normal market, because every market is a normal market in a sense. We have to expect it. But if there weren't these other catalysts and impacts, I would lean very strongly to say, these numbers, the history does tell us, it tells us that probably things will shake up. We'll shake up at first and then kind of piece back together. But what you're saying is that the fact that our markets have been coming down a little bit already, this doesn't mean that we're at the bottom. It doesn't mean that there's not more to go. At least if I can maybe echo what you're saying, the war event in and of itself may not be as big of a concern to the markets as I don't want to misspeak here, but yeah, as people may feel in the moment.
Yeah.
But then when you compile that with where we are just in our economy, in our world, and kind of how things have been going, that doesn't mean we're out of the woods yet. And hey, this entire past year, starting this year, since before this whole invasion, we've just been I don't know how to speak for yourself, but I've just been a little more cautious, just treading a little more carefully. I think for myself, that's going to continue going forward. Who knows where the bottom is? We never do know. But what we do know is that if we're liking stocks at a certain value and there's ones that we do identify we like, absolutely, we either add or just dollar cost average in if that's part of your strategy. But I think that's honestly the way that investors should play it, that's how I would look at it.
I think that's a good summary, Brandon. And it just kind of comes back to, if you are a long-term investor, just you have a plan to regularly be adding to the markets, and this is kind of, you can go to the time in versus timing the markets, and time in the markets will win out. I think times like this, you can say, well, maybe put a little bit more in, or just understand that strategy there without having any expectations that we're through the worst of it. But we'll never know until we go back. Just have your plans, stick to it, and just be an investor. Now, if you're a trader, there's tremendous opportunities to make or lose money right now. You know, if you're more of a short term look, you can dig a little tighter on these different things that are happening right now. But yeah, kind of my take on it, Brandon. As far as
well, no, thank you for sharing. Yeah, thank you for sharing your thoughts, Dad. I mean, I know I promised the video coming out Monday, so that's when they'll be watching this. But no, I appreciate you kind of sharing your experience and what you've lived through and kind of putting together a few slides, because I think it's very, very valuable. And I think we were targeting maybe a 10-minute video. I think we doubled that in length, but as usual, if you guys did enjoy and you enjoyed the thoughts, a great way to show that is just by dropping a big thumbs up. Just drop a thumbs up on the channel. That helps so much. If you're not already subscribed, we post videos like this every week. And of course, we have our academy down below. So I will remind you guys that if you are a Canadian that's looking for, we focus on Canadians. So Canadian market, not Canadian market, but Canadian audience. If you're looking for courses and training, we do have our Investing Academy, and that is down below. You can learn about all the different programs that we offer. That'll be linked down below. And Dad, thank you so much for taking the time this weekend.
Now, this is normally where we would say, hey, let's go watch some football, but it's done. So we won't be watching any football today. Sadly.
Next season, we'll just do nothing. Yeah, we'll just do nothing today.
Sounds good, Brandon.
Awesome, Dad. Well, hey, thanks for sharing. We'll talk to you soon, and thank you guys all for tuning in to the end of the video.
Thanks, everybody. Okay, bye-bye.
See you.